Dear students, sorry, and welcome. Working accountants. Welcome to my Smart TallyPrime YouTube channel. My name is Baburao from Hyderabad. Today, I request you all, please watch the video till the end, because in this video, there are two important things. So watch the video till the end and don't skip. If you skip, you cannot understand the practical work done in the TallyPrime. So you will miss it. So watch the video till the end. And after watching the video fully, if it is good, please like my channel. And in the bottom, in the comment section, please post your comment without fail. Okay. And then now we will enter into our subject, our topic. So today our topic is, I will share my screen. Today our topic is, so yesterday in the previous video, in the non-accounting vouchers, we discussed about them. We completed 2 non-accounting vouchers, post-dated checks as well as optional vouchers. Today, we discuss 2 more vouchers, memorandum voucher and reversing journal voucher. So, we will take up a problem and we will discuss about that. What is meant by, we discussed already what is a non-accounting entry and how it will be used like that. So now we completed 2 and now we are going to the third one. So we will take up now memorandum voucher. What is meant by a memorandum voucher? And the next one, what is meant by a reversing journal entry? So what is meant by a memorandum voucher means, so we record the transaction whenever they happen, whenever they occur. But sometimes we record the transaction, but we cannot confirm the exact transaction or the exact amount. We cannot confirm. We cannot confirm the exact amount, and it will be confirmed that it will be known in future. That is why when the transaction takes place, we will record in that, but we have to make it not to affect the books, because the amount of the transaction is not confirmed. That is why what we do is we will pass a entry to make the transaction not to affect the books. So such voucher is called memorandum voucher. Ordinary transaction only. We'll record the transaction, but we make it memorandum voucher so that it will not affect the books. And when the transaction or the amount of the transaction is confirmed, then only we can make it regular voucher. We can convert that. We will make it regular voucher, then only it will affect the books. So first of all, there are 3 examples. One is, small examples only we will take up. We'll go to TallyPrime. So here I already created a company, that is a non-accounting vouchers company. So see, this is creation of the company, everything is same. And then going to F11 features, if you create a new company, automatically after creation, we will go to F11 features. Otherwise, if it is an existing company, we have to click F11. So here, accounting features. So maintain accounts, 2 vouchers, 2 options we make yes. And that is we enable. And in the inventory wages, we make 2 enable. 2 options or 2 features we enable. Inventory and accounts, integrate accounts with inventory. And in the case of the taxation, generally, we enable the GST details. Okay, but here in this case, we are not going to use the taxation option. That's why I make it. I'm not enabling that. Then I accept this over. Now we will go to this. First one is on 1/4/23, cash handed over to accountant 950 rupees for daily sundry expenses. So on 1/4 we given, and that is handed over to accountant for daily expenses, but we don't know what is the total amount we paid, 950, but we don't know how much he will pay, what will be the expense, we don't know. That is why, just like advance, we record the amount paid, but we keep it pending. We keep it separately. We keep it pending without affecting the books. And when the amount is spent, the accountant will give the account. What is the amount spent for which expense and this. Then we can make the transaction, that is the already recorded transaction voucher. We can convert into regular transaction, regular voucher. So here what happened on first of all. And on second, the accountant spent 450 for stationery out of the amount handed over to him. So amount given to him. he spent only 450 towards sent stationery expenses and returned the balance. The balance amount is returned. So make the entry. So here, so exactly 950 we are giving, but we don't know what is the amount he will spend. So he spent 450, he gave the account and hand over the balance amount. So first when we paid the money, we make it as a memorandum voucher. And when the account is, transaction is confirmed, then we will make it a regular voucher. So we'll go to here. So go to vouchers. And in this case, we are paying the money. So we are paying the money. And when we are paying the money, we have to pass the payment entry. So we have to pass the payment entry. So what we have to do? Yeah, payment is F5. So click F5. F5 is the payment entry. Date is 1/4/23. 1/4/23 is the payment date. But here, when you are making the payment, actually this amount, this is not a confirmed transaction. So you are paying towards the sundry expenses. Sundry expenses, and we are giving towards sundry expenses, but he spent for stationery. Okay, sundry expenses we are giving. I don't know. We don't know what are the amount spent and for what expense he will pay. That is why we have to make this one as memorandum transaction or memorandum voucher. This is a payment voucher, no doubt, but we have to make it as memorandum voucher. So for the memorandum voucher, see here, we can open that in F10 other vouchers only we can open. We can open. And when you are opening, we can, if it is not active, we can activate it and open that. So, but in this case, here in the alter button also, we can activate that. So here, go to voucher types, go to memorandum voucher, and here you have to, actually it will be no. It will be no. It will be no. So we have to, we have to activate that. So in this case, here in the alter button, we can activate that. And if there is anything, any configuration should be done, that can be done. So activation, that is the voucher to be activated. It will be activated as well as the any configuration can be done, but it cannot be, that voucher cannot open. That is why if there is no configuration, directly we can go to vouchers. Here we can activate as well as we can open. So go here. So here, memorandum voucher, so generally it will not be available. So if it is not, we'll go to show inactive. So we'll go to show, here I'll show you. Here in the alter button, go to voucher types, memorandum, we will make it no. Okay, here we can only activate that. So if you go to vouchers, go to other vouchers, so memorandum voucher is not available. So go to inactive. So in this case, it will go, see here, inactive memorandum. There is no shortkey. That is why we cannot open with shortkeys. We have to open from F10 other vouchers only. So here, if you click that, it will ask you to, it is to be activated. Do you want to activate? Yes. If you make it, it will activate and it will open. So on first, I already gave the date. We are giving towards sundry expenses. Okay, we can make it as sundry expenses account, paid towards sundry expenses, or paid to accountant, open accountant account and make the payment. Okay, we will make anything you can do. So what I do is, I will open accountant account. When you are paying the money, he will be the sundry debtor. He will be a sundry debtor, and then we accept this. At how much you are paying? We are paying 950 here. Or directly what we can do is here, instead of the accountant, you are giving for sundry expenses, we can make as sundry expenses also. Anything, sundry expenses or accountant. We are paying cash. Cash 500, 950 we paid. So being advance paid to accountant for expenses or sundry expenses. So it is activated. You see here, I told you it is a memorandum. Every voucher will be displayed in daybook. So in the daybook, you see on 1st April, it is displaying 950 paid on sundry expenses, and it voucher type, it is not a payment. It is showing as memorandum, and it will not affect the profit and loss account expense you are paying. So here there is no sundry expense is there, but amount is not shown. It is not affecting. Similarly, in the balance sheet here, if you go, say in the cash we paid, so it will not affect in the cash. See, in the cash is not shown, so it will not affect. But in the Daybook, not only this, all the transactions will be shown. If you want to see these type of memorandum transactions, memorandum vouchers, go to display, more reports, go to exceptional reports, then go to, see here, go to memorandum register. So here there is one entry. One entry is there. So this is the entry, sundry expenses, memorandum 950. Okay. Now, then, so it is not affecting. Now what we do is, on second, the accountant spent 450 and he gave the account and hand over the balance. So if you enter the 450, make it a 450 expenditure. That means the other balance is not affecting the cash book. It's not affecting cash also. That is why only 450 will be shown as expenses. Balance return amount is not shown, not paid, not returned. Okay. And now go to vouchers. So, sorry, not vouchers. Go to the exception vouchers. So already we passed exception voucher. That is called memorandum voucher. Go to memorandum voucher. Open this now. Open this now. Now what we do? We have to make it, we have to convert into regular voucher. So when it is done second. So on 2nd April, so it is first we entered. 2nd April means if you click F2, automatically it will change. Suppose after 2-3 days means we have to type the date. Okay, here. And he spent the money for what is the expense? He spent for stationery for 450. So here in this one, and in this memorandum, we have to make it as regular voucher. So in that case, what you have to do is, see here, go to, in this memorandum voucher is to be converted into expense. When you pay the expenses, what you will do? You will enter in the payment voucher for expenses. So click F5. So automatically it becomes payment voucher. Sundry expenses. In the sundry expenses, the amount paid for, he paid for stationery. So make the expense as stationery. Stationery is not there. So create stationery expenses. Okay, it is indirect expenses. Indirect expenses, accept. So stationery expenses, what is the amount paid? He paid only 450. So 450 to cash. Now see, this will affect. So here, if you go to daybook, so the memorandum voucher disappear. It will disappear. See here, on 2nd April, sundry expenses 450. So it has become the regular voucher, as well as the amount is also changed to 450 and the expense is also changed to stationery expenses. Even if you when you pay, you entered the accountant account also, that will be changed. So now, so it is showing in the daybook, every entry will show. And see profit and loss account, you see sundry expenses 450. Okay. And then go to balance sheet on the cash in hand. Go to cash in hand. So 52,000. So 450 in April. In April, 450 is paid. That is called the balance is shown. And here, in this case, display more reports. Go to exceptional reports. Go to memorandum. So no entry is shown. So that is converted into regular voucher. That's all. This is called memorandum voucher. Then we will go to next problem. Another one. Here, 10,000 rupees paid to Arun for attending meeting in head office and return the balance. So paid the money to attend the meeting for expenses, that is traveling and conveyance, and return the balance. On 2nd June, so that is our 1 month. 2nd June, Arun submitted the bills and other details for 8,500 rupees towards traveling and conveyance expenses and return the balance. So here also, we will go to 1st May, not 1st May, 31st May, not 1 month, sorry, after 3 days. So on 31st May, we will make the entry. On 31st May, we will make the entry, but we have to make the memorandum entry. So we go to memorandum, enter, and here we paid, we can write it as we paid to Arun account. So we can make it as in the previous case, we paid the expenses. Now we will make it as Arun account. We paid how much? We paid 10,000 rupees. 10,000 rupees we paid and credit cash. So it is showing against reference, that is showing an account because there is no entry previously. That's why it's now showing against him. So 10,000 rupees we paid. So here, so it will show in the balance sheet, what you call in the daybook, in the profit and loss account. So it will not show anything. And also when he entered in this account, he will be a debtor. See in the debtors, in the debtors list also, his name is not shown. His name is not shown, so it will be shown in the exceptional reports and the memorandum register. So it is showing in the memorandum register, memorandum. Now on 2nd June, for 85,500 rupees, he gave the account. So now go to the exceptional reports. So display X is the short key, exceptional report. M is the report short key for memorandum vouchers. Now we open this, and when you got it, 2nd June, make it 2nd June and make it regular voucher F5 payment. Come to this debit. Debit is, we paid to Arun. Now it is the expenses, traveling and conveyance. So make it traveling and conveyance, for 8,500 rupees to cash. So it is converted into regular. Now we go to, see here, memorandum voucher gone, and go to day book also. The 10,000 rupees is shown as 10,000 rupees gone, 8,500 rupees only expenses. So traveling and conveyance, now it is showing as payment, not memorandum, 8,500 rupees. It will affect the profit and loss account also. See, traveling and conveyance, 8,500 rupees. And because of that, so the net profit is 3,150. So that is why. So if you go to balance sheet, so debtor in the sundry debtors, his account is closed. His account is not shown. In the profit and loss, the effect is profit is affected, 3,150 profit. Okay, like this. And the third one is, this is sales. This is simple. See here. Go to voucher, go to memorandum, date is on 1st May, memorandum, here, debit, to whom we sold goods to Alex. So Alex account, how much? 25,000 rupees. Okay, Alex account, 25,000 rupees. To what we did with that pay? We have paid, we have sold the goods. Here it is a memorandum account. It is not a sales voucher. So simple, just like voucher, it will be there. So here we have to write sales. So if you enter the sales voucher, after the name of the party, below that, it will ask the sales account, sales ledger. We give the sales there. The same thing you will give here. So here, it is asking the items numbers. So we don't know. So name of the item we will give just item A. Quantity we will give 25,000 rupees we will give. Sorry. 25,000 rupees we will give. So 25,000 rupees we sold. Okay. So this year, so in the balance profit and loss account, see the sales. In the sales, go to the sales. It is not showing the 25,000 rupees in the month of, that is date is 1st May. So in the month of May, it is not showing the Alex account as well as the sales. It is not showing. Okay, it will not affect the profit and loss account also, balance sheet also, and in the exceptional reports, memorandum vouchers, there will be one voucher. Now we created. So 25,000 rupees sales. So it is shown as memorandum. And then Alex for approval or return. So we sent them, sold the goods, but I asked them to approve the goods, take the goods or return them. So on 31st July, Alex accepted the goods. So on 31st July. So now go to display more reports, go to exceptional reports, memorandum vouchers, go to this, open this on 31st May. So 31st May, on 31st May, converted into regular. What is the transaction? Previously expenses, payment voucher. Now it is sales. So sales voucher, F8, automatically the format, everything. So item invoice, name Alex, sales ledger, item A, everything is there. So tax we are not giving. If there is tax, we will give tax also. Okay. So like this. So it is converted into sales. Now you go and see in the day book, it will show as sales 25. See on 31st May, sales 25,000 rupees. Previously it was memorandum. And in the memorandum account also, the memorandum account disappeared. Now go to profit and loss account. See the sales increased by 25,000 rupees. That is for May. For the month of May, see Alex 25,000 rupees. It is affecting. Okay. And in the balance sheet also, the Alex will be a debtor. You will become a debtor. You see, Alex 25,000. So it is affected. Like this, see, all these three problems, you try yourself and take some other example you can try. Okay, try it twice or thrice, you make it. You make the entries, you will understand. Okay, the next one is reversing journal. What is reversing journal? It is, see, in the case of, generally it will be used by the auditors. See, when a transaction, when at the end of any month, if you want to see the financial position or profit or loss of the company, so we can go to the profit and loss account, we can see the profit or loss. But generally, some expenses will be paid on cash basis. That is, whenever you pay the expenses, we will make the entry. In such a case, some expenses related to the last month, that will be paid in the next month. In such a case, that is the expenses for last month. That is why the profit or loss of last month up to the end of last month, the profit or loss will be affected by this transaction, but it is not recorded. We will record in the next month. That is why, just for knowing the exact profit or correct profit or loss, just will make an entry, but it will not affect the books. It will make an entry, so it will affect the only profit or loss. It will show the profit or loss only on that date, and next day it will disappear. That is, it will automatically get reversed. Automatically, it will get reversed. And when you pay the money after some time, the next month, so then only that will affect the books. Before that, it will not affect the books. So it will show only the net profit or loss, the result which we want. Generally, in the case of auditors, we give the books to them. So some transactions amount will be paid next month. We have not paid, so we have not entered. But so because of that, the profit or loss shown in the business is not correct. So in this case, I will show you whether it is. If we go to profit and loss account, we will check up 21,000, 12,160 is the net profit. Net profit will take up. Okay. Because of this, I am taking 12,160. 12,160. Okay. So 12,160 is the profit for this on 31st May. So not 31st May. This is on 2nd July. On 1st April, no, reversing journal. Net profit on, we'll take it as 1st April to 31st July. Okay. 1st April, that is 21,150. So not 160, it is 150. Okay. On 31st July. 31st July, recorded is not recorded. Okay, 2nd August. Okay. So here, the profit is 12,150 when it is on 31st July, it is the profit. But the salary for the month of July, that is July now. So for the month of July, so here we paid the, every month we pay the salary. For April month, we pay in the May 2nd. For May month, we pay in the June 2nd. For June, we pay in July 2nd. So up to July 2nd, we paid the salaries. See here, salaries. I don't know. I don't think it is paid. Salaries are paid. I'll check up DAL. Salaries not paid. Okay. Okay. Let it be. So we pay in the next month. So for April, we pay in May. June, for July, we pay in August. So for the month of June, we paid in July. But for the month of July, we have not paid. We'll pay in the next month. So it is not recorded. So for the month of July, 20,000 rupees is payable salary. Okay. But it is paid and recorded on 2nd August. So in the month of August, it is recorded on payment basis. Now here, so to know the exact, in this case, because of this amount is not recorded, so this profit is not the exact amount. So if the expenses are recorded, so the profit, in the case of profit, the profit will go down. If it is a loss, the loss will increase, so that the income tax payable, everything will be different. That's why the auditor will ask you, exactly all the we are recorded or not. So if they're not, wherever are not recorded, we will make the entry. This entry is called reversing journal entry, because automatically for that date only it will be effective. It will show effect, and next day it will disappear. It will automatically get reversed. That is why the next one is the same thing. Next one, just there it is only one expense. Here there are 3 expenses. That's all. So the same method we can do. So here what we do is, now we will go to here. What we do is, this is called a reversal journal. We make the entry reversal journal on 31st June. We are watching the profit. We are checking the profit on 31st July. So 31st for the month of July, we have to pay on 31st, but we pay in the next month. So salary is on 31st, we have to make a entry. Okay, here we have to make a entry. So for making the entry, we have to make the reversal. It will not affect the books. We are not paying the salary. The cash will not be paid, but it is not shown. So next day it will be disappeared. It will disappear. That is why what we have to do is, we have to go the voucher is called as reversing journal. So here this is also same thing. If it is not active, go to show inactive, then go to reversing. It will be inactive. Accept. It will ask you to want to activate that. You make it yes. So yes means activate. We will make it activate, and it will become. And when you are making 31st July, on 31st July, you are making the entry. So what we are doing here, we have to take the salaries. We have to make the salary. So salaries account debit amount is 20,000 rupees. 20,000 rupees, and then credit cash. Credit cash. Just we are making this. So this is the entry. So this entry will be applicable. It will be applicable and effective for that date only. Suppose if you pay in 30th July, so it will be applicable only the month end only. Up to 31st July only, it will be effective. That is why applicable up to 31st July. Okay, and you can make it as up to 1st August. It will be show effect up to 1st August. Then it will get next day. It will get reversed. So when it is reversed, so in the 2nd August we are paying the salary. Then you can make the ordinary entry, payment entry, salary is debit, this one. So like this, we accepted. Okay, but now here you see, even though for the 31st, that one, you see the profit and loss account. So here we are looking up to 31st July. Salaries, that is not affected. So it will show effect on 31st, isn't it? On 31st, it will show effect. It will show in the books, and it will get reversed in the next day. But it is not showing. So for this, to see the profit is not changed. Profit is not changed. That is why to see the real profit, we make it as, we create another one called as scenario. Why for any reversing journal, we have to create another one called as scenario voucher. That is, what is the scenario? Why you are creating journal? I mean, reversing journal. Why you want to reverse it in the next day automatically? That's called as scenario journal. So go to create button, and here it will be available in the accounting masters. If it is not available, go to show more. If you click that, so it will be available. So go to this one. Go to this one. Create name. We will give. What is the name? The expenses are payable, not paid. We can call it as provision for salary. If it is one, there are many expenses. You can call as provision for expenses, or outstanding expenses, or provision for expenses, or outstanding expenses, or expenses payable. Anything. I will make it as provision for. Here it is only salary. We can make provision for salary. We can make, or if in the next problem, you see, there are in the next problem, salary, electricity charges, everything is there. So in the entry, we will write, when you are writing entry, salary account debit, electricity charges debit, rent debit, credit cash. But here we will get as provision for not one. For each one, we need to open a separate provision, separate scenario. You can make it as provision for expenses. Or here also we can make it as provision for expenses, and name already exists. Name is already existing. So here, if you go to vouchers, so here, go to other vouchers. Scenario is not there here. So already exception vouchers. Reversing journal, na? So in the reversing journal, there is one reversing journal we opened already, 20,000 rupees salary. Okay. Now, scenario is already available, expenses, everything. That what we do is, that scenario, how it will be created is, if you go to this one, go to scenario. So here we will give the name provision for expenses. Okay. Yes, here, view yes. And if you come here, it will be called as, 1 minute, it will be, I will do this one, alter scenario, it is there. So I will delete this. Okay. I will delete. Now I will show. So go to create. Now see, it is not shown. So here, show more. Here it is showing scenario. It's already created, that we are showing now. Provision for expenses, include actuals, yes. Then include what is to be done. It is to be included. What are the vouchers to be included? Reversing journal, for the purpose we are making. So take the selected reversing journal, and all others should be excluded. Here, then come down, exclude. If it is selected, included means all others are excluded. We need not give any list. So just enter. So provision for expenses scenario is created. Now you see, now go to profit and loss account to see the real profit. Here is it. If you go to Alt F1, all the details are shown. Salaries are not included here. So exact profit is shown. Okay. Now what we do is, here we have to see the actuals and we have to see the scenario, that is adjustment of scenario and the real profit or loss with the help of scenario and the reversing journal. So for that, what we have to do is, see here, we have to take another, this is the actual amounts. So the scenario and the reversing journal amount is to be shown in a separate column. We have to create another column. So come to this right side, all to see, new column. Click this or click all to see. So here it is the column details. So beginning from 1st April, ending, don't give, we did up to 31st only. So leave that, and stock valuation not required, default. And here we are using for provision for expenses. The scenario we are using for provision for expenses, and I mean share invariance show, you leave that, make it no. Okay, no problem. Here see, this is the actual amount which we profit and loss account is showing. And because of this reversing journal, what will be the profit or loss? See here, 2,150. 2,150 is the profit. Sorry, 12,000. 12,150 is the profit. So in the case of profit, if we have enter expenses, it will go down. So minus 20,000 is the salary, isn't it? So make it minus 7,850 will be loss. If it is a loss, loss will increase. If it is a profit, profit will go down. See here, salaries. So 20,000 rupees is the scenario. Reversing journal we made. All others are same as it is. All others are as it is. This is the only extra amount. That is scenario or reversing journal. We created the salaries. So here loss is 7,850. Okay, over. So this is the about the reversing journal. And we see, so we see this. Go to the exceptional reports. Go to the exceptional reports. Reversing journal is available. We made the reversing journal, that is on up to 31st. So it will have effect only up to 31st. So for example, you see in this case, you take, in the case of this reversing journal, the reversing journals take first, you take, that is what you call reversing journal, you take F2. F2 means first, that is 31st July. Not 31st. The next day is 1st August. Take 1st August to 1st August. Take that. So reversing journal for August not available. So automatically it is reversed. In the profit and loss account also, anything in the what you call in the profit and loss account also. See here, it is showing as it is. It's not affecting. Even after that, if you take from 1 April to 1st August, even if you take that, it will show the same thing. So it will not change. There will be no that the reversing journal automatically it is effective on 31st August, 31st July, and next day 1st August it is automatically reversed automatically. We need not do anything. Other cases we have to make them regular vouchers, post dated to regular dated, current dated, optional to regular. We have to make. But in this case, it will automatically get reversed. So this is what we have to do in this case. In the second example, the same thing. Only difference is entry in the reversing journal. salaries debit, electricity charges debit, rent debit to cash. And if you go to that, then we have to create the scenario. So in the scenario name, we will give outstanding or provision for expenses. We'll give, that's all, and accept that, and go to the profit and loss account. And then in the profit and loss account, what you have to do is Alt to see, click Alt to see. If you click Alt to see, it'll ask the beginning date, 1st April, ending date, leave it, and then come down and collect the scenario of profit and provision for expenses and enter. It will show 2 columns. Alt to see, because this is a new column. It will show the new column. First one is actuals, original showed in the profit and loss account. The second column, that is the scenario column, that is the reversing journal column. In that, the entries made in the reversing journal, they will be displayed and they will show the actual profit or loss because of those entries. So this is about the reversing journal and memorandum journal. Memorandum voucher. Memorandum voucher is only for uncertain transactions. We don't know the exact position, not confirmed. Then we'll enter that memorandum. When it is confirmed or everything is done, then we will make it as exact entry. We will change the entry and make it as regular. Payment means expenses means F5. It will become regular. Okay, right. And if the date is on some other date, that is confirmed on some other date, though on that date, we'll give the date, change it to regular voucher. That is, if it is sales, make it sales voucher. Expense, make it payment voucher. And then change the, in the case of sales, so automatically it will convert into sales voucher and everything will be shown. We need not change anything. But in the case of expenses, so we don't know the name. So we give some name and what is the expense and the date, everything we have to give. In the case of sales, only date we have to change. That's all. Okay. So this is how we make the optional entries. Non-accounting entries. So with this topic is completed. And so do one thing. You watch all the videos in the serial number I told you now. Okay. And everyone, please subscribe to my channel and click bell icon and select all. You will get notification for all the videos which I upload in my channel, and share my channel with all the other people. And you practice these topics in every topic more and more times, then you will get a very good knowledge. You will become a very good accountant. And I wish you all the best. Thank you. Bye.